Hey everyone, and welcome to the Lazy Paddler Investor Show. This is part 2 of our spelunking trip deep into the annual report from Activision Blizzard. Now that we've completed the letter to shareholders, we're going to get into the 10K. My name is Harlan Bea, and I'm here to help us all become better long-term investors. Before we get started, just a few reminders. I am an individual investor, and these opinions are my own. I'm not speaking for any companies I work for or manage. I probably own shares in most of the companies I'm going to discuss on my shows, so I do not recommend you buy or sell any of the stocks I discuss. Remember, always do your own research before you make decisions about your own investments. Alrighty then, let's start exploring the 10K. Let's clear out this. Very nice, very nice. Okay. So I'm going to be taking this 10K through its paces pretty much from beginning to end. I'm not going to focus on all of the sections, otherwise this would take days for me to do. I'm going to focus on the sections that I believe have the most potential to give us a vision into the future, and the ones that I pay the most attention to. So if you're coming into this as a newer investor, I think this particular review will be very helpful for you. This is the way I have kind of developed to go through these things on my own. And I'm going to go deeper than I ordinarily do. I would go faster if I'm going through this on my own ordinarily. I will try to explain as many things as I can, as clearly as I can, but use the comments section below to let me know if you have particular comments, particular questions about the things I've covered, questions about my perceptions on these things, obviously, but also basic questions, right? Like, what does revenues mean? That sort of thing. If you need me to dig a little bit deeper into those topics, please let me know. So if you have watched part 1 of this, I read the investor letter, which is up here, signed by Bobby Kotick and Brian Kelly from Activision Blizzard Management, the CEO and the chairman of the board. And it should be noted that even though they signed this document, it is a letter to the shareholders, not a mandatory SEC requirement. It is a nice thing that they do. I think of it as a rah-rah kind of situation. They're trying to point you toward thinking about things in a certain way. But it is notable that this is what they want you to think. So part 1 is like what they want you to think. Part 2 is what the SEC says they have to tell you, us as investors, right? So once we start getting into Form 10K, they're on the hook. They're liable for these statements personally, right? This is what gets audited, not that investor letter up above. This is what gets audited by their auditors. Not that it wouldn't be illegal for them to mislead us in this document up here, but they get a lot more latitude in it. A lot more latitude. Okay, here we go. So the 10K refers to an annual report. There are also 10Q reports. Form 10Q is a quarterly version of this. So companies will put out one annual report, a 10K, and then 3 quarterly reports as they're waiting for the next 10K. So they don't do 4 10Ks. They do 3 10Ks and then a 10K. Sorry, they do 3 10Qs, then a 10K, and then they cycle through that. So when you're looking for the forms that you want to look at, just be aware that the 10K is far more complete. It's not that it's more accurate or not. It's just it's more complete. It has more history. It has more detail. There's a lot more discussion in it. The 10Qs are more like, this is how we're kind of going this quarter. I think the SEC and the folks who wrote the rules for this were basically trying to give information without making it super burdensome on the companies, because putting together the annual report is a lot of work. All right, let's go on down. So we've got the name of the company, file number, this sort of thing. Great. We've got where they are incorporated. It's something to note that they're incorporated in Delaware. Delaware is a very, by reputation, I don't actually know why this is, but Delaware is a very incorporation-friendly state. So a lot of companies, even though they're headquartered in other locations, like Activision Blizzard, I believe, is headquartered in California. Delaware is is Santa Monica. There we go. Santa Monica, California. So Delaware is the state of their incorporation. So they'll probably try to take filings, court filings and stuff there instead of here in California. This is done primarily for litigation purposes, I believe. Don't quote me on that. I'm not exactly sure why people do this. Is it good to do this? I don't know. I think there's something disingenuous about a company that's headquartered in California saying, oh, we're actually a Delaware company. There's something disingenuous about that. A lot of companies do it. So I don't know. Illegal? No, definitely illegal. Unethical? I don't know. I don't know enough about it, so we'll see. And then this is their investor relation phone number. So, fun fact, a lot of investor relation departments are super helpful for folks. So if you are thinking about investing in Activision Blizzard and you need information, go ahead and give them a call. There's nothing, like a lot of these investor relation folks are very nice. If you're doing this for the first time and you're like curious about something that is in here and you want to know a little bit more, give them a call and see what they can provide you. They may have links to things that are public information that they can help you through. They may be able to direct you to specific sections of their documentation where you can learn more. So don't be afraid to just reach out directly and call these folks because they're not that busy. I'm sure they're very busy, but they're probably willing to help you out. So down here we've got the common stock's par value. Don't let this scare you. Par value is something that is typically kept very, very low on purpose. It has to do something with that being the minimum value of a share, but your stock's probably never going to be that low. It probably has something to do with bankruptcy or something. I don't even know. It's not something that I really ever pay attention to. This you should definitely be aware of, the trading symbol for your company. You want to be aware of two things when you're trading a company. You want to be aware of its trading symbol. So ATVI in this particular case is how you would look up your company. And you want to be aware of what exchange they're trading on. So in this case, they're trading under the NASDAQ Global Market, Global Select Market, or in short, everyone calls it just the NASDAQ. NASDAQ stands for North American Stock DAC or something. I don't know. Not something to worry about too much, but be aware that some companies, particularly with smaller numbers of letters in their trading symbols, may have a doppelganger company that's not, it has the same trading symbol, but it's traded on another market. So there are instances where there are similarly, they have similar symbols, but one's trading on NASDAQ and one's trading on, say, New York Stock Exchange or one of the other exchanges. Just always check beforehand, run a search for your company, make sure that you're getting the right one when you're doing any sort of trading. And I don't know of any doppelgangers to Activision, but I have seen others. I think Zoom, which I do invest in, the the video conferencing system everybody seems to have been using during the pandemic. They had a similarly named company called Zoom in China. They traded on different exchanges, and I think they had similar tickers, but they had like the same name, so it was confusing. It can happen both ways. Like they can have similar names, but just be in different market areas. Just be aware, always be sure that you know what it is you're buying. I also had an intern I was working with who was trying to look up a particular company, and they were looking for a education company that they were familiar with, but they ended up looking up a insurance company instead and not realizing it because they didn't read through the description of the company. So we had to clear that up. Okay. So I'm going to clear through these sort of check mark areas there that are all about filings, and I'm going to go right down to table contents. And so just in here, the section I like the most is business. So up here in item 1, do I have a pointer? Do I have a pointer? Well, if I put this into the PDF mode, I'm sure I would have a pointer, but it's fine. So I'm going to be looking at business primarily. The reason why I focus on this is because I'm a long-term oriented investor. So the results from the last few years are important to me in that I want to see that good fiscal management is in place at the company. But looking at past results doesn't give past financial results, past earnings or revenues or expenses or things like that. They give you an idea of what their current run rate is, what things are doing right now, but they're hopefully and probably almost always going to be different even next quarter, next year. Hopefully they'll go, the good things will go up, the things you want will go up, the things you don't want will go down. Right? Or at least balanced with respect to each other as a percentage, right? So you're hoping that expenses are going to get lower as a percentage of revenues, and so your profits are going to increase, yada, yada, yada. But for me, that's less important to how the business is, where the business is aiming, what their focus is. Because if I'm looking for a company that I'm willing to keep in my portfolio for 10, 20, 30, 50 years, I want a company that has long-term goals, long-term optionality, right? And a company that not only has those, but the management sees them and is willing to take long-term steps to build that out. Right, to build it out for the next management team or 2 or 3 management teams further on, right? Some companies do this better than others. It is what it is. I'll look through risk factors a little bit more. Unresolved staff comments, this is interesting. I'll have a look at that. Properties, I believe that's physical properties, physical locations that they own. We'll find out more when we get to it. Actually, it might be intellectual property that they're going to go through. That would be very interesting to me. If physical property, I don't care. Legal proceedings, yeah, that's going to be interesting next year when they go over the details of all the things that have happened this year. Mine safety, not going to be an issue for a company that primarily exists online for sales and production. Let's see, and then yeah. Selected financial data is the other thing that I'm going to be looking at, and then we'll skim over some of the other stuff. Cool. All right, here we go. So they always have a cautionary statement. They're basically going to tell you, hey, we're trying not to lie to you, but we might screw up and we may misstate in here. And if we project something, all these assumptions are things that we believe, but that doesn't mean they're actually going to happen. Forward-looking statements are subject to business and economic risks, reflect management's current expectations, estimates, and projections about our business, and we are inherently uncertain. And they are, and are inherently uncertain and difficult to predict. So I get it. I get it. And everyone should understand this when they're looking at forward-looking statements from any company at any time. Whether they're making them in one of these formal documents or not, and whether they have a cautionary statement or not associated with them, just be aware, people who are making predictions in these businesses, they're not oracles. They can't predict with precision what the future is. However, there are things that we as human beings can predict. And there are reasons why we can do so. We can predict them within a certain precision level, let's say. I can predict that the sun will rise tomorrow morning on San Diego, say, where I live. I can predict that with near 100% certainty. It would take a catastrophic event to either destroy San Diego or to like have a huge rock hit the earth and knock it off of its axis, so that like all of a sudden the earth stops rotating and our sun doesn't come up tomorrow. That would be a huge catastrophe for everybody. And it would also mean that there is a non-zero chance, a chance that's not zero, but it is very small, that the sun will not rise tomorrow on San Diego. And then we get to things like, I'm going to meet Big Bird tomorrow. Chances of that happening are very low. I mean, I might go to a Sesame Street rally somewhere and meet Big Bird, but the chances of that are very low, approaching zero. It could happen, I guess, but there are reasons why it's not going to happen. There are reasons why I can say that there is almost a zero chance of me not meeting Big Bird tomorrow. Of me meeting Big Bird tomorrow. So, and the reason for that is because I don't plan on going to any Sesame Street events tomorrow. I don't plan on, seeing anyone who's dressed as a giant bird. It's not in the cards for me. But tomorrow, as my name says, I do plan on going paddling. There is a very high chance I'm going paddling tomorrow. The reason for that is because on Thursdays, I go paddling. I put my canoe up on my car, I drive to the beach, and I go paddle with people. And it's fun, it's awesome. And I do this as a matter of course. Does it mean for sure I'm going to go paddling tomorrow? No. The weather might turn on us. There might be a significant amount of traffic or some problem that gets in the way. I might have to take care of my family. I might get sick. There are all kinds of things that could happen. But the chances are, because I've planned for it and because I know that I do these things on a regular basis, and most Thursdays I try to go paddling, I'm probably going to go. I would say the chances of me going paddling tomorrow are in the 90 to 95% range. Probably going to happen. Cool, right? So when you're thinking about these statements, these forecasts, outlooks, the will, coulds, shoulds that they're talking about in here, remember to differentiate between the things that they're predicting will happen in the world around them and the things that they are predicting they will plan for, right? What they are planning to do. So, and this goes for every company, right? You can tell where a company probably is going to go by the things that they say here, because they're going to try to explain to you where they are aiming. Is every company going to be able to get there? No. Are some companies lying to you through their teeth? Yes. Are some of the people who sign these things complete frauds? Yes. Some of them are. It happens. Is that the case with Activision Blizzard? I don't know. Probably not, though. For the most part, the people who run public companies, especially in the United States, are trying to do their best for themselves and their communities and their employees and their constituents and shareholders. I actually firmly believe that. I firmly believe that. The vast majority of companies and the people who work at them are trying to do the right thing. As we start looking through here, we'll see what the right thing is for these people and see if it matches with what I think is the right thing for them to be doing. And that's basically how I make my investing decisions, right? Are they doing what I would want them to do? All right. Caution. Other factors out of our control. There are risk factors. They're going to list them later. Great. And then there are abbreviations for marks and stuff like that, just letting you know that these things are their service marks. That's great. Oh, also, this entire report is in US dollars, in case you're listening to this from another country. Activision Blizzard is a US company, and we are traded on the NASDAQ, as I said before, and the SEC requires reporting in US dollars. So even though they may be selling things in other countries, they will calculate the totals of those dollar amounts, even if they may be in yuan or yen or real or whatever, or euros. Right? They will calculate all of those dollar values using conversions to get to a US dollar amount. And so sometimes you'll see things where they're talking about how international currency fluctuations actually help or hinder the numbers of a company in a particular year, and the companies generally have no control over that. It's usually much higher level. It's a macro thing, so it has very little to do with them. It's just how they're holding their currency. They don't always bring their money back to the country that they are incorporated in, and they certainly don't do it right away. All right, item 1, business. Cool. So, Activision Blizzard is a leading global developer and publisher of interactive entertainment content and services. Or you might call them a gaming company. But whatever they want to say is fine, I guess. I don't like management gobbledygook in a lot of cases. So, come out and say, you're a gaming company. I don't know. So they operate esports leagues. They do digital advertising. They develop and distribute content on game consoles, PCs, and mobile devices. They're the company. Yeah, okay, good. This is all whatever. All right, let's get to strategy. This is the meat. This is the good stuff. All right. Their objectives to connect and engage the world through epic entertainment. By continuing to be a worldwide leader in development, publishing, and distribution of high-quality interactive entertainment consoles and services, as well as related media that deliver engaging entertainment experiences on a year-round basis. Okay, and then they're talking about having 3 strategic pillars: expanding audience reach, deepening consumer engagement, and increasing player investment. Let's think about this for a second. Is this going to get us to where we want to be? Is it going to get me to where I want to be as an investor? I'm behind entertainment experiences that are engaging, that come out on a year-round basis. I'm good with that. Expanding audience reach, deepening consumer engagement, increasing player investment. I guess these are the. It's interesting that those are their strategic pillars. They seem more like measurements of whether they think that they're getting to where they want to be. So I guess they're going to always be trying to expand their audience, deepen consumer engagement, increase player investment. They're not horrible, but I don't know. There's something about them that feels like, all right, there's nothing here. There's nothing here about building great games. Maybe there is later on. Let's dig into each of these. Expanding audience reach, building on our strong established franchises and creating new franchises through compelling new content, offering content on multiple platforms and across multiple business models. And when they say business models, they mean premium, free-to-play, or subscription-based. I don't know what premium means. I assume that means buy once. Pay a lot of money and buy once. Free-to-play would... All right, I have a bone to pick with free-to-play. It is free in the sense that you don't have to pay up front with money. But free-to-play usually means you're paying with your attention to advertising. So it is not free in the way that it is not completely free. You are basically paying with your attention, the friction, by absorbing the friction of all this advertising that comes toward you. And then subscription-based, that's simple, that's straightforward. I'm down with that. So I like multiple platforms. I think people on different platforms should be able to play. And I like the idea that they want to build new content and keep their existing franchises going. I know a lot of people give them crap for always like putting out a new Call of Duty or something. But if you're a Call of Duty fan, I think you're excited getting a new Call of Duty every year. I think they just dropped one recently. I think people are excited for this stuff. And remember, there's always someone who is getting a PlayStation for the first time, and this Christmas they're going to get their first Call of Duty game. And that's awesome, right? I gave them shit in my last show for like building shooters, but like I love shooters. Shooters are fun. I don't want to go shoot people in person. That's horrifying. I don't want to do that. I would much rather shoot a digital person with my digital person and not have any risk of, actual bodily harm. It's fun. It's virtual combat. It's cool. So I'm definitely not too high and mighty to play shooters. I enjoy them quite a bit. I'm a huge fan, actually. I'm not actually a fan of Call of Duty, however. So I will give them a little bit shit for that. But I love Destiny, which used to be associated with them, is not anymore. But these kinds of playable content, I think, being able to get new experiences that are high quality and well developed and well supported, I think that's great. I'm super, super proud of them for continuing to give us that information. And when I'm looking over here, maybe I should go like this. That way, when I'm here, how do I adjust the size of these? Good enough. Whatever. Okay. So if I point over here, I know I'm pointing at the thing. I'm just not always looking at it because my actual screen is over here. Sorry about that. If that's confusing to anybody, you can yell at me in the comments and I'll try to fix that for next time. Okay. Driving deep consumer engagement. So high quality entertainment content not only expands our audience reach, so they're kind of presuming that they have high quality entertainment instead of talking about how they are going to get to making such a thing. They design their games as well as related media to provide a depth of content that keeps consumers engaged for a long period following a game's release. That, I would say, is true. One of the things Activision is really good at is creating experiences that have high replayability. And particularly that's this ability to play against other people in a live environment. And then they're also designed to provide players the ability to connect with each other socially. Also true. Also probably a good... So I would consider these to be like strategic pillars, the way that they design their games. Basically around franchises, around communities, and around keeping people engaged for long periods of time. I see those as things that are actually the pillars of like keeping their customers happy. And then let's see, increasing player investment. What are they talking about here? So they want to offer additional digital player investment opportunities for things like buying full games, subscriptions, or investing in franchises by purchasing additional in-game content. I'm actually a fan of this. Downloadable content, smaller content that you can buy with microtransactions. I'm actually a fan, especially if it's not a pay-to-win kind of situation. So like if you're a designer and or you're a company that's working on something like this and you want to find a way to kind of ethically earn more money for your efforts, I'm totally fine with you providing me with cosmetics and fun little things that I can add to my experience. And I'm also a big fan of downloadable content. I know a lot of people get angry when a game comes out and it's not as big as they were hoping. But as a programmer myself in my past career, I can tell you that creating any program is more complex than you understand. So I think that a lot of the folks who whine about stuff online where they're like, oh, this game, when it dropped, it should have had all these other things in it. Why does it have this map hidden somewhere and you didn't actually give us that thing as playable content? Well, there are a lot of reasons for that. There are a lot of good reasons for that. When companies make decisions as to what to provide players and what to sell, they have to balance quality with gamer expectations, with the abilities of the designers to design in a reasonable time period, for the writers to write in a reasonable time period, for all the complexities of the game mechanics, for the servers to work, for your for all the different platforms that may be able to play that program or that game, whether or not it can be played on those platforms, how big it has to be, how small it has to be. They're juggling a lot of different things, right? So they're constantly building and testing, building and testing, building and testing. And if during the process of building and testing you create something and you're like, oh, we're not going to be able to we're not going to be able to finish this for this particular iteration. Maybe we can use it for later downloadable. It actually is risky to remove the content that you've created from it. And sometimes additionally time consuming, right? So to make a game that's just like 100% dialed in, just the stuff that goes with that game, is actually quite difficult. Sometimes pulling that stuff out would cause additional problems, and then you have to go through more and more and more design iterations to fix things. It's impractical. And I have a lot of sympathy for companies that put out good content that later they will build on to become excellent. So and I mean, keep in mind, they're putting that content out into a digital marketplace where there are competitors. If you don't like a game, you don't have to keep playing it. If you don't like a book, you don't have to keep reading it. If you don't like a TV show, you can stop watching it. There's plenty of things to do out there. If you would like book recommendations for fantastic books to read, let me know in the comments. I'll give you a bunch of book recommendations. Geez, you don't have to play Activision games, and we'll know as shareholders whether or not a game is doing well or poorly based off of whether people are actually buying it and what those reviews of those games are and stuff like that, right? So this to me, downloadable content and doing more and more of it, is actually a positive. I like it. I like the fact that they're concentrating on building out their games and making those games work better for people in future years. However, if they're using their player base as test subjects, I do not like that. I do not like going into a game and having it freeze on me and being like, wow, what, they didn't play level 3, right? Like they didn't stand here and get locked in behind a rock like I did, and they didn't think to fix this. Like there's no autosaves. Like what? Yeah. So there are things I am more tolerant of than others. In general, though, Activision, in my experience, in my opinion, does make high quality stuff, and doesn't have too many of these problems with their recent games. I haven't heard of them, at least. Maybe I'm a little bit too far out of the Call of Duty web sphere, but seems to be okay. And let's see. They're looking for additional player engagement in advertising within their franchises, esports, and consumer products. So I actually like that they're mentioning this. I'm not a huge fan of advertising within franchises, but I get that some of their, particularly mobile offerings, they're going to have a lot of that. It is what it is. I'm fine with it, I guess. Esports, I think, is a huge opportunity for Activision Blizzard. I like that they're doing that, and I like that they are running their own show with regard to it. I also like that they're building consumer products out, but I question their strategy on this because I feel like they should have been doing this for years, and they have not. So they're letting good opportunities pass them by because they're not doing a good job of building consumer products brands and getting exposure for those. I would love to see a toy line that is well well advertised and well regarded by folks around their various franchises. Like, I don't understand why there's not a big consumer products line around World of Warcraft. I really don't get it. I feel like people would buy that stuff up. Call of Duty also. I maybe they haven't maybe they don't feel like it's been a focus for them, but I feel like it's a huge opportunity that they've been ignoring for too long. Esports, they've been putting some significant investments into, and I think they're trying to find ways for it to work for them. And I'm glad that they're testing it right now. Cool. And they are still in the early stages of developing these revenue streams. I get that they're not a toy company. I get that. And I get that they're not a events coordinator company. I wonder if an esports subdivision would be appropriate and a consumer product subdivision would be appropriate. Something that's like managed completely separate from the game side of it. Similar to how parks so when you look at Disney, parks is managed separately from cruises, is managed separately from merchandising, is managed separately from the film division, right? These things work together at the top level, right? So you'll have an Avengers experience at Disneyland, or California Adventure, I mean. They'll have an Avengers experience on a cruise line. They'll have Avengers, obviously, in the theaters. I do invest in Disney, just so you know. But then each of those divisions is in charge of doing those things. I am wondering if they have organized properly to create space and importance around these various things. Because I think they all work together to increase player enjoyment and player engagement. And I think that it is wrong to take consumer products and esports and put it into the increasing player investment category of a strategic pillar, because I feel like it is basically also part of this driving deep consumer engagement thing. Thinking about it, I guess it doesn't matter in the end. I just feel like I personally find it engaging when I get to buy things that I enjoy for the franchises I enjoy. Like over my shoulder here, you'll see the Millennium Falcon glowing, and you'll see a Mass Effect Omni tool glowing. These are merchandising things that I've picked up over the years, and they're cool, right? They increase my enjoyment of those franchises. And they drive consumer engagement, right? And I as a player, I don't think of it as like I'm investing in this thing. I think of it as, oh, these are cool. I'm engaged. When I come in here, it makes me smile to see the Falcon. It makes me smile to see the Omni tool glowing just like a real Omni tool in the game, or a real digital Omni tool in the game. It gives me a kick, right? So I feel like they get it, but I don't know if they get how to do it yet. And it's not like it's rocket science, like building toys, building like tchotchkes for people. I don't think it's rocket science. So I'm a little bit worried that they're like, oh, we're just starting this. Netflix also has this problem. They're trying to build out a consumer products brand, and it's like, Netflix I also invest in. So, yeah. Okay, segments. Let's do this. Based on our org structure, we conduct business through 3 reporting segments. So they are Activision Publishing, Blizzard Entertainment, and King Entertainment. Okay, the difference between these. All right, so this is kind of what kills me, right? So these companies have brands of their own. I get that the brands are important. I get that. But these companies are all game companies. They're all game companies. King Digital is the one that's the most different, I would say, because they focus on these sort of free-to-play things, and they focus on mobile. Almost primarily, that's how they do it, I think. And then Blizzard has premium and free-to-play offerings, primarily generates revenue from full game and in-game sales and subscriptions, and software licenses to companies that distribute their products. Okay, so they also have Blizzard Battle.net, and that's how they distribute games. So if you're not familiar with Battle.net, you may have heard of Steam, or you may have heard of the Apple App Store. So the App Store, the Apple App Store and Steam, they're basically places where you can get apps from the Apple App Store. The App Store sells games, apps, whatever. And then Steam is like that, but for PC gaming, right? So if you're in the market for a video game, you can get your games distributed to you through Steam. And it'll load up on your PC. It'll host your DRM and handle all your transaction kind of things. And it has sort of a centralized launching location where you can go grab all your games. It makes it easy to keep things organized. Battle.net is Blizzard's basic way of saying, hey, we don't want to distribute through Steam, through this third party. We don't want to pay them for all this. Instead, we're going to host our own servers. And we're going to distribute for not only Blizzard's games, but we're going to distribute for Activision's too. So the Blizzard Battle.net actually distributes Call of Duty. And I don't know what else Activision publishes that they have there. But I mean, Call of Duty is obviously huge, so they distribute it on that platform. So let's see. They have so Blizzard has World of Warcraft. A lot of people have heard of this. It's a subscription-based, massive multiplayer online role-playing franchise. It is huge, and it is old. And it keeps getting updates. So and it has a very engaged player base. Hearthstone is a simpler game. It is based off of the characters in World of Warcraft, in the sort of Warcraft universe, but it's an online collectible card game. And then we've got Diablo, which is a separate franchise, and then Overwatch, which is a team-based first-person shooter. And then we've got, they don't even mention StarCraft or StarCraft 2 here. Those are older games which kind of made the studio. And also they basically created esports. So, and this was created out of Korea. So it's interesting that they do not mention them at all, because I am a StarCraft 2 player and I really love it. And I wish that it wasn't just going to go away, but looking at this, it feels like it's just not on their radar. It's not important to them anymore. They've reduced the development team for it to almost nothing, so I guess they're not afraid to pull the plug on things, but it's disappointing. Because I feel like StarCraft and the StarCraft universe and franchise is every bit as rich as these other franchises. They just couldn't figure out how to leverage it properly. So let's talk about Activision Publishing last. Activision has, again, premium and free-to-play offerings. And yeah, they primarily generate their revenue from a whole slew of things. I don't know how they can say they primarily generate their revenue and then they say, like, In full game sales, in-game sales, licensing software to third parties, related party companies that distribute Activision products. That's like 4 different ways. That's not the primary way. That's like 4 ways. Anyway, their key product is Call of Duty, where you run around and you shoot other people, digital people. Important to note. So they also have Call of Duty League, which is a global professional esports league with city-based teams. Cool. So if I was going to think about how to manage a large game operation, I would not manage it like this. So the reason why it's like this is because the people at Blizzard have a reputation from before they got acquired. And the people at King Digital have a reputation from before they got acquired. I don't know what kind of deals were struck when these things were acquired or when they merged. It may be that there was a deal struck saying we're going to keep the Blizzard name forever and we're going to keep separate offices and separate development teams, yada, yada, yada. It may be that this is contractually required. However, it doesn't make sense to me that these would be necessary. So, for example, the people who develop every game basically form a team together. So you've got your development team and you've got their sort of live team, maybe for doing live events. And your teams exist until that game is produced, and then they may do additional updates to provide for bug fixes and stuff like that. And those teams kind of get spun up and wound down as the game moves through its path of life. There's no particular reason why a game should be under the Activision title header or the Blizzard title header or the King Digital title header. They all are kind of individual things. The same skill set is involved in producing all of them, with maybe the exception of King Digital, which is mobile first. So I could see them moving into a more, in my opinion, logical, more logical framework where they have a team basically for each of their major franchises. And they just have their organizational structure based on, all right, here's our game design division, and then we've got a subdivision for Call of Duty, a subdivision for World of Warcraft, or Warcraft in general. We've got a subdivision for like Candy Crush, etc. Right? And then people would move around in between those things. And you're like, oh, I designed mobile for Candy Crush. And they're like, oh, you're a good mobile designer? Well, we're trying to build mobile Diablo something. Why don't you come over and join our team? And you just move over there. Like having this sort of siloed kind of structure is weird to me. And I think creates a situation like where you have separate cultures in each of these separate divisions. Separate reputations. I don't know. I don't know if it's good. I guess I don't care that much. But it just seems weird to me that they haven't ever integrated. As a fan of Blizzard, personally, I grew up playing their games and feeling like they were higher quality than most other game companies. As a fan of them, I don't want to see their brand go away. But that doesn't mean like having the brand on something gives it a certain cachet, right? But right now, it doesn't feel like there's a reason why something has to have that brand, other than it historically was one of the things that Blizzard developed before they came to Activision. Shrug. Okay. They have other reportable segments: distribution, logistics, warehousing. Okay, cool. And then they're talking about COVID-19. So what is the point of this segment? So they're talking about their segments, they're talking about the strategy, and now they're talking about COVID. I'm going to skim through this a little bit because we talked about this a little bit more in part one. So it has negatively impacted their business activities a little bit. And then they had their folks go home. Let's see what happened. Their business experienced an increase in demand. That is definitely true, as people were home and they wanted to play. So they had strong content sales for Call of Duty Modern Warfare and the Call of Duty Warzone in March. This is March 2020, I believe. World of Warcraft's in-game content in August 2019. Oh, I guess Call of Duty Warzone, that's probably... Yeah, I guess if they're talking about March, that's 2020. And there's been a moderation since the stay-at-home orders were enacted. Okay. I'm not super concerned about this for them. COVID-19 definitely, I feel like, has a hopefully short-term impact. I think probably we'll be seeing the impacts of COVID-19 for 5 years, 2 to 5 years more from where we are right now. And I think they, as a business, are pretty insulated from it because they can have their folks work at home. They can distribute safely over the internet. There's a lot of things that you can do as a game company or as a digital content provider that are fantastic for COVID. So I would almost say that COVID-19 was a boon to their business, a positive thing for both them and us as consumers. They're providing something that we needed: entertainment, sanity, and then we give them our support, monetary support and whatnot. And then also for them, they don't have to necessarily go in the office. So I think they're pretty much insulated. Now, Overwatch League, which is an in-person gaming league, and Call of Duty League, again, an in-person sort of league, they had to go away from their fan-attended things. So that's an issue. They adjusted their league operations to reduce operating costs. I get that. Okay. Got to keep people safe. So COVID-19 is uncertain. Yeah, I would agree. Just because I think it's going to be 2 to 5 years doesn't mean that's true. Just want to say, much like them, I want to caution you. My forward-looking statements are also guesses. So, but it's what I see. It seems like with some of the new drugs that are coming out, it looks like hospitalizations and deaths might start to go down once we start to get these actual antiviral treatments going. Cross our fingers, of course. Hopefully these are as good as they say they are, and we can keep a lot more people alive if they hit the hospitals, and maybe even keep them out of the hospitals. So I'm going to skim on down here. Majority of their workforce is currently working from home as of the time of this. I don't know if they're still doing that. They have implemented their business continuity plans. That's fantastic. Yada, yada, yada. More actions. Do with state, federal, and foreign authorities say. Okay, that makes sense. and then they don't know what's going to happen. Yeah, well, none of us know. Okay, great. The full extent of the impact is unknown, but their balance sheet seems to be strong, I think they're saying. So strong balance sheet, that's their opinion. Okay, we'll see when we get there. And I think they have flexibility. Oh, this is them talking about cash and equivalents. So they have $8.8 billion worth of cash, cash equivalents, and short-term investments. This is great. This means they can probably pay people. We'll go have a look at like what their expenses are as we get down below. Might end up being a part 3 as we go through financials, but that's great. Obviously, you want your companies that you invest in to be able to continue operations. Cool. Products. All right, let's get into this. So they develop for PC, mobile devices, and console. And they have a variety of distribution channels. Cool. Oh, what do they have here? So they have different genres. First and third person action adventure, role playing, strategy, and match 3. I'm assuming that match 3 refers to King Digital's Candy Crush game. I've not heard of this term, so I guess maybe I'll learn something today about this. Huh. So they've got following things: premium full games, free-to-play offerings, in-game content with microtransactions, subscriptions, primarily for World of Warcraft franchises. Okay. That's good. So I have a good idea of how they make money. So I guess as an investor, when you're looking at any company, you should be aware of where the cash is transacting, right? Every company needs to pay its employees. Every company needs to pay for some sort of expenses. They're going to be paying for maybe office space, but maybe not. They're going to be paying for physical materials that they make into things, but maybe not. Like in this case, you're generally, or for the most part, they're probably not paying for that kind of thing. They're probably licensing out, like, oh, if we're going to make discs. Well, actually, do they even make discs anymore? They probably don't even do that. If they're doing physical item creation, it'd be like in the merchandising kind of area. So shirts and toys and tchotchkes and stuff like that. Not a huge part of their business right now. So, but then like you want to know, how's money coming back to them, right? What are people paying for? Are they paying subscriptions? Are they paying microtransactions? Are they paying for one at a time items? Are they paying for additional items like downloadable content on the gaming side? These are basically the things that you see right now. For other kinds of companies, people will be paying for other stuff, but typically you'll get the one item, one sale kind of situation. This is common for things that are sold through retail. You'll also get subscription based, so something like the New York Times, which I do not invest in, pretty sure. Or you'll get situations where companies are making money from, for example, advertising fees or licensing fees that are paid to them. And then you'll have interest for banks, right? Where banks are charging you interest or service fees. There's all kinds of different ways companies can make money. It's important for you to know how each of your companies make money. If you have a stock in your portfolio and you're like, yeah, they seem okay, but I'm not really sure how they make money, that should be a red flag for you. That should be you saying to yourself, maybe I should pay a little bit more attention to that. Maybe I should at least open up this section of the 10K and go down there and figure out what it is that they are selling and how much money that they are making for it. Or at least how they plan on doing so. They don't, not every company is always making money all the time. Some companies, and this was really common early on with the internet, first sort of stumbling steps that humanity made into its internet situation. There were a lot of companies that basically were like, well, we're just trying to get viewers right now. We don't know how to monetize this all. That's not to say that those companies were all bad investments. Some of them were bad, some of them were good, some of them turned out to be fantastic investments, and others turned out to be catastrophes. Just because you're not making money right now doesn't mean you can't in the future, but you as an investor need to at least have an to be able to imagine how they will do so. Do you think they're eventually going to be able to sell advertising or subscriptions or something like that? If this is a company that makes physical goods, do you think that there's enough market out there? Do you think there are people who are willing to buy those goods? Not sure, right? So be aware how they make their money. A special note on how companies make their money. There are two industries that are more difficult to understand than most other industries, and that would be insurance and finance. If you want to invest in banks or insurers, I highly recommend going through their at least one or two companies' 10Ks and looking to see how they make their money. Understand what they mean by making money with interest expenses and with interest income and non-interest income for banks, and then how insurers can manage their float by investing their float. It's basically money that they get that they don't have to commit out. It's float. So like if I pay $10,000 this year for an insurance contract to an insurer, they get $10,000, and I may not make a claim this year. Someone else may not make a claim this year where they have to use that money. Or maybe someone does make a claim and it's only like $5,000 they need to take out of that, and they've still got $5,000 that they can do something with. Typically, they won't keep that in cash. They'll invest it. And that's how a lot of these insurers will make money on top of just earning money and fees from you. Float. And then banks make money in a lot of different ways. They'll charge service fees for things, which are non-interest income. And then they'll charge interest fees for things. And then those are interest income, and they're variable. Well, both of them are variable, actually. So those companies are different than normal retailers, because a normal retail kind of oriented company, say like a toy manufacturer, I make a toy, it costs me something, and then to make that toy, I've got to pay for the materials, the packaging, the person who makes it, the equipment to make it, and then I make the toy, and I make thousands and thousands of those, and then I give it to a retailer, and then that retailer marks it up somewhat, and then they sell it. And then I'm kind of out of it as the toy manufacturer once the retailer buys it. And then eventually it gets into someone's hands like myself, and I put it up on a shelf, and I go, yay, I've got a toy. But for the retailer, it's kind of easy. You basically are like, well, I know how much it's going to cost for me to buy all this plastic and all these parts that I need to make the toy. And I know how much it's going to cost me to, pay people to make the toys. I know how much it's going to cost to make $10,000 worth of toys. And then if I can sell that $10,000 worth of toys for $20,000 to a retailer, I've made $10,000 in profit. Yay, okay, cool. It's a lot easier to understand for most folks because you're like, well, I know the concept of a lemonade stand. I understand like how these things basically work. But a lot of folks are not familiar with the idea of, okay, you're going to charge interest like a loan shark, and you're going to, charge people variable amounts of service fees for their accounts, and like Like how that stuff structures is all different. And the product in that case is actually a financial service. So it's a little bit more loosey-goosey, and people don't, it's not as easy for people to understand. It's outside of most people's normal understandings. At some point, we will start going through banks or pseudo banks, because I do invest in, for example, PayPal. They have a lot of bank-like services. Okay, let's see. Product development and support. So they're focusing on developing wholly owned franchises. I love that they're doing this. I wish that every company I owned had a big stable of healthy franchises. I'd like to see them developing a few more. I like that in their shareholder letter, they were talking about adding a couple. Let's see what they say here. Well-designed, high-quality games, yes. Interactive entertainment. Okay. This is all BS. Franchises, extended period of time. Okay. So, distribution of content based off of established franchises to them means they have more predictability in their revenues and probability of high unit volume and operating profits. Okay, I buy that. I would agree. And that's why people call them money grubbers. I don't understand the attitude there, though, because I'm like, look, if you're a fan of Call of Duty, don't you want to see a new Call of Duty product come out next year that's different? Don't you? Or do you just want them to not? I don't understand. Do you not want to pay them for their work? I don't get it. I don't get it when people complain about companies that make things and then people buy them voluntarily. It's not like you're forced to buy anything that Activision Blizzard makes. Nobody on the planet is forced to purchase their products. People just do. They like it. Anyway, okay, moving on. Too much concentrating on Twitter commentary or online commentary, I guess. So they're focusing on their franchises. I get it. That's great. Cool. Develop and produce titles using a model in which a group of creative, technical, and production professionals work with marketing, finance, analytics, sales, and others to... What is this? What are they trying to say here? So I think what they're trying to say is that their production model incorporates not just the game designers, but also marketing folks, finance folks, sales folks. So what they're basically saying is like, we're acting as one studio and we're kind of treating our game development the way that a film studio would treat their film development. Where there are a lot of sort of bean counters who play a role. It's interesting that they call this out here. So I think they think this is a positive. Well, maybe they don't. Maybe they recognize that not everyone thinks it's a positive, and that's why they're calling it out. They're basically just saying straightforwardly, yeah, this is how we do it. If you don't like it, you don't have to invest with us. And that's fine. I am okay with it. I am okay with it. So far, I think they've done a fairly good job. We believe this model allows them to... Now, when I say that, I mean in producing content. I'm not saying that in terms of... I'm not saying that in terms of how they've managed their internal human resources issues. So just to be clear, I am very skeptical of their internal cultures. I think that they have some severe problems that they need to work through. And that's part of the reason why I'm doing this review, because I am worried about their ability to attract talent, because I think they've employed a lot of jerks and they've created a culture where being a jerk is rewarded and where acting in potentially allegedly criminal ways is also rewarded. I'm also concerned that they have a lack of diversity. Straight up. That is a problem for a company that produces entertainment that they hope will travel worldwide. If you don't have good... The United States is a uniquely diverse country. When you go to other countries, when you've traveled to other countries, you will note, I believe, that most other countries are fairly uniform as far as the people who live there. In the United States, people speak hundreds of languages. We speak languages from all over the world. We have communities from all over the world. We have immigrants from all over the world, immigrants and children of immigrants, right? We also have a vibrant Native American population that typically gets ignored when we talk about BIPOC communities. Adding a diverse set of people to particularly entertainment franchises at all levels of an organization, I think is going to become increasingly critical to both create compelling content, authentic content, content that people feel like is real, people feel like is new and interesting, right? And people see themselves in. That kind of stuff is profitable, straight up. And it's good for society, I believe. So when you've got something that's both profitable and good for society, if you're not doing it, it's a problem. You're basically leaving the playing field open for a team that can get their shit together and do it right. So my question for Activision is, can you get it right? So when I say that Activision's doing a good job, I mean, I have fun playing some of the games that they make. Is that going to continue? Is someone going to do better than them? The way things are going right now, it looks like they've got problems. They've got issues. I don't know if they're going to be the best going forward. I don't know if they're the best today. Some people might think so, but I don't know. Okay, cool. Let's move on. Well, most of their content is developed internally. Sometimes they have independent third-party developers to create content. Okay, why do they do this? From time to time, we also acquire license rights to publish or distribute software products that are or will be independently created by third-party developers. Why? Why would they bother to do this? Why would you license something and then give it to a third-party developer and then just sort of act as a go-between? That doesn't actually make any sense to me. I think that the reason why they probably do this is because they're afraid of committing to building out a development team and then having to lay them off because the thing is done and they don't have work for those people anymore. And so they go to a third-party developer to say, here, develop this thing for us. It's probably a one-off thing. It might give you 5 years worth of work. And then when it's done, it's probably done. And then they don't have to be like, oh, we laid off 10,000 people this week because we're done with that thing. Maybe they're doing that. I don't think this is a big part of their business right now. but I'll keep it in mind. Okay. So product support. They have dev teams, technology teams working on support. I should hope so. They have QA personnel involved throughout the development and production of published content. QA lately is like a very, very difficult job. We'll see how they do with this year's drops, but I in general I think they do a fairly good job with QA. Let's see. They do extensive testing before public release, as they should. And they provide 24-hour game support to players through online and telephone support. Really? They have telephone support lines? How strange. I can see that it primarily would be online. But they do offer it. That doesn't mean they'll get to your issue really quickly. And I think people misunderstand how quickly things can be fixed. But they do have people out there listening, I guess. Okay, cool. Marketing, sales, distribution. In-game messaging. Marketing efforts for online social, online advertising, public relations, print broadcast, in-store and industry promotions. Okay, so they market everywhere they can think of. I mean, I see their advertisements everywhere. I get it. They're in outdoors. They're, direct response vehicles. What does that mean? Is that like text messaging where people respond back? Product sampling. I get it. Okay. I'm not super worried about their marketing team. I feel like their marketing team does a really good job. But I don't see... All right. I was just going to say, I don't see like how they would build something new for later on. Maybe that, let's see. They're talking about how they distribute their products here. So on a lot of the walled applications like Apple, Facebook, Google, Microsoft, they have to host their games on those app stores, those gaming stores. So like if you're buying something on a Xbox, you would have to be hosted on Microsoft's service. And then if you're hosting on BattleNet, Blizzard BattleNet, yay, it's yours, and you can get it to people's PCs, which is good and cheap. Ooh, look, I'm starting to look haunting. I've got like just a little bit of sunlight on the side of my face. Maybe I'll light myself a little bit better. Hang on one second. Pause. That's a little bit better. Cool. So that's how they're basically getting their applications out and how they're doing their distribution. And then they have physical products still at certain places like Target, Walmart, Best Buy. Oh, speaking of which, I'm mentioning a lot of companies here. I invest in Apple. I do not invest in Facebook. I invest in Google. I invest in Microsoft. I do not invest in Nintendo. I don't think. Do I invest in Nintendo? I don't think so. I do not invest in Sony. I do not invest in Target or Walmart or Best Buy or GameStop. I do invest in Amazon. Let's see. social networking, player matching, and digital content delivery is designed to allow people to connect regardless of which games on Battle.net they're playing. Oh, right. So Battle.net offers like communications going back and forth between everybody, kind of like the way that the chat systems work on Sony PlayStation or on the Xbox, where it doesn't matter what game you're in, you can chat with people who are playing on that same platform. All right, so I'm going to pause here for a second, and I'm going to go back to their products thing. I'm not getting a big like idea of what the future is holding for the company with these strategic points that they're talking about here. I feel like the things that they've mentioned that are new would be in-person esports, or I guess digital esports, any sort of esports support, and marketing. Merchandising. So physical items that you can sell to go along with the game, not the games themselves. So toys, posters, what have you, right? Playing cards. I don't know. My worry is that they're not even talking here about. They're not talking here about new things that are coming down the road. I'm skimming down right now just to see. Yeah, they're not really talking about anything that's coming. They're talking about their big franchises, and they're basically saying, "Hey, we're gonna keep building out our big franchises." So I guess that's what I can expect. And in the shareholder letter, they did mention that they're going to have in the next few years, or they're aiming to have in the next few years, one or two more new franchises. So actual new themed items. I'm hopeful that they'll be interesting and compelling enough to create a whole new set of players and engage people in a new way, and maybe get them into some things that they're not into right now. Hopefully it'll be something that I want to play, but I'll be happy if there are things that just people want to play in general. I'm worried, though, that they're not explaining what they're trying to build. And I'm also worried that they don't seem to have a good amount of communication as far as like how they're going to get there. So let me give you an example of what I mean by this. Ford, which I do not invest in, has recently stated that they're going to be building out the Ford F-150 as a electric truck, and they're going to do that, I think, within the next 5 years or something. Don't quote me. It's coming. It's basically like something that's happening. Great. I'm thrilled for them. I'm glad that they're doing that. I wish that they had done this 10 years ago. I think it's it's going to be a huge thing for everybody if we can get the F-150, which is amazingly popular truck, on the streets, and that it is electrified. Very happy for that. So if we can think about that for a second, what Ford is basically coming out and saying is like, look, this is what we're hoping will happen. We want this to be built. Are they going to get there? Are they going to be on time? I don't know. But they're telling us this is what the future holds, right? They could have come out a little bit more non-specifically and said, look, we're going to put a passenger truck on the road in the next few years. We're thinking it's going to be, or we want to make it a fully electric. Our time period is 5 years. We're not going to tell you what it is right now. And maybe later they tell you it's an F-150. Or maybe they say, hey, we got a new truck coming out. It's going to be a revamp of an old one. We think you're going to like it. and it's going to be all electric? Or like, give us some hints. That way, I as an investor and I as a consumer can have an idea of what is coming and what might be happening. You can give different levels of information to people depending on what you think that is good for your business, what you think might get people hyped. But right now, there's just a very tiny line, and I'm going to go back up to it. What page are we on right here? We'll come back here to page 7. Okay. Let's go up here where they talk about it in their investor letter, because I want to see exactly what they said. Oh, okay. Here is the phrase that they used. We expect to add hundreds of millions of players to our audience through these launches. And when they say these launches, they're talking about the launches to existing franchises that they've got above, as well as multiple unannounced potential franchises in our pipeline. So they are not announced. But there are many of them, which I assume is more than 2. I assume that many means more than 2. Otherwise, they would have to use, or multiple. All right, I guess multiple means more than 1. So at least 2 potential franchises in the pipeline. And they don't say when, but they do say multiple unannounced potential franchises. What I want to know as an investor isn't necessarily what these franchises are. I'm fine waiting. It doesn't bother me that they want to keep these things hidden. That's fine. They don't even necessarily have to tell me particulars about what they're going to be like. But I would kind of like that. So, for example, you could give different levels of information about them. You could say, hey, this one's going to be a science fiction shooter franchise, and this one's going to be maybe an RTS franchise. Maybe you don't want to give other developers an idea of what you're doing necessarily, but you could say, like, hey, this one's going to be maybe about the themes of it. Like, this franchise is going to be about historical kind of events, or this franchise is going to be about fantastical events. I don't necessarily feel like it gives other companies a edge against your business if you start hyping these things. I know people get a little weirded out. As managers get a little bit weirded out by the enthusiasm of the online community as we sort of try to snoop and figure out what these things are. But if you're going to tell me that you've got multiple unannounced potential franchises in your investor letter, and then down here, you're not telling me anything about how you're deciding to build out new franchises, whether or not, like, I'm assuming King and Blizzard and Activision are all building new franchises, but maybe not, right? Maybe Activision isn't focusing on building a new franchise. Maybe Blizzard isn't. Like, it would be helpful to know, like, where the franchises are potentially coming from. Like, we think we were going to have one or two more franchises from Blizzard in the next 10 years, something like that. You don't have to commit to anything necessarily, but it'd be nice to get at least a little bit of color into these, just so that just so that um, as a investor, I have an idea of where you're going. Because right now don't. I don't have any idea where you're going. If you're focusing on mobile franchises, that would be helpful. Like differentiating between mobile franchises and PC franchises or console franchises, that would be helpful to know, right? Where you're putting your focus, those are things that really helps. You don't even need to say anything about what the subject of the game is, but explaining like where you're going to be putting your focus. It helps me as an investor, and frankly, I don't think that there's any competitive advantage someone else is going to get off of you saying, what your focus is going to be. In fact, it might be better for you because you might be able to clear the field a little bit. If people are like, oh, King's going to come in and just be focusing 100% on mobile, but also Blizzard is going to focus 100% on mobile, then they'd be like, well, maybe I should put our stuff out on console instead. It may clear the field. It may not. I don't know. I know people get weird about this stuff, but it's like if you're making quality product, believe in yourself. You're going to be okay. people will play your games if you make quality games. It doesn't matter. Okay. So I don't feel like I have an idea of what the future holds other than the fact that they're going to keep hitting these annual refreshes of games that they make a lot of money off of today. I don't know. And so it's sort of worrisome as an investor because if I see something, and we're going to see these later on, I've got some charts on what sales look like. If I see things declining for a particular franchise, I would be worried because I know that that's where their focus is. And if their franchise is declining and that's what they're giving me less and less over time, then I'm worried. If people aren't enjoying it, it becomes a problem. Check out that sunshine on my face. Very nice. I love it. All right, cool. It's almost time for me to end this. So I'm going to be wrapping up. We're almost through the meat of this, which is great. So let's see. Product development and support we talked about already. We are on page 7. Marketing, sales, and distribution. So they market everywhere they can think of. They're on these various game platforms. That's great. They sell physical. That's great. They're not talking about new things in here necessarily, but I feel like they do a good job with it, and I don't feel like I'm in the dark about what they're doing for promotions. I feel like their merchandising or their marketing teams and their sales teams seem to do a good job kind of keeping up with trends and being where players are. Manufacturing. So they prepare master program copies of products for each release platform. Okay. And they do the disk duplication, packaging, etc. through third-party subcontractors. So they have, or distribution facilities that they own. So they do use third parties, but it's not 100% third party. And then Microsoft, Sony, and Nintendo specify or control the manufacturing and assembly of finished products and license their hardware technologies to them. Okay, cool. Good to know. And then they pay a royalty, I get that. That makes sense. Oh, if you're unfamiliar with how this works, so they're basically saying here that, let's use an example of Microsoft. So let's say you're making a game for the Xbox. The Xbox has technology on it that you have to integrate with, and integrating with it requires that you basically are paying for a license to do that integration. So Microsoft may provide APIs, application programming interfaces, or maybe guidance as to how to use their software, or their hardware on the system. And for you to integrate with those things, typically you'll pay a licensing fee as an organization based off of a number of units that you're creating to Microsoft. So that's part of the way that Microsoft makes money off of their platforms, even though they sell their platform to you at a loss. So, so if an Xbox costs like $1,000 for Microsoft to build, they may be able to afford to sell that to you for, say, $600 or $700 and make up the rest of it as you buy products down the line. I'm not saying it actually costs those differentiated amounts, but even if they're selling it to you at cost and they're making no quote unquote upfront profit off of the hardware, later they're doing things like they're charging you something, they're taking some off the top when you buy something from them, and they're also taking something from Activision Blizzard when Activision Blizzard is doing development and is putting out copies using their APIs and such. And it's important to note that they pay this royalty once the manufacturer fulfills the product order, even if the units don't sell. That's interesting. So this is for physical products, right? I believe that it would be different for digital sales. But then digital sales, you're probably going to be selling through a walled garden, right? So you're selling through Microsoft's Xbox store or whatever they call it, or the PlayStation store, right? For Sony. So they're going to be taking their cut there. So it's possible that the licensing is a little bit different on that side, but they want to make sure that they're getting their cut. Microsoft, Sony, Nintendo, they're going to get their cut one way or the other. Significant customers and top franchises. Okay, I'm getting a little tired. We're about at a good stopping point here. Let me see if this is a good place to stop or not. I think it is. Yeah. Okay. So this is going to be a really long walkthrough. I am okay with that. I'm okay with that. And I hope you join me for the ride. I probably will not go through the 10Ks and 10Qs in as much detail as this for other companies. If I did it for all the companies I'm going through, it would take forever. So instead of doing that, I'm going to focus on trying to do a very in-depth analysis on this particular, on Activision Blizzard. And then for future installments, we'll get into particulars of those particular companies. Because we'll find after we go through one company in depth that the next companies that we hit will have similar types of stuff. And maybe we'll zoom in on just the appropriate pertinent items, the things that I care about the most on those. And maybe we'll do a little bit more skimming. Okay, so for next time, we're going to start at page 7 on the 10K. And we're going to go through significant customers and top franchises. And hopefully we'll get to financials. at the very least, we'll get to risks. Risks is always fun. It's always fun to imagine all the things that could go horribly, horribly wrong. But in closing for today, I wanted to say this. The future for Activision Blizzard is more of the same, I guess. What this is telling me is they're going to keep doing the same old, same old. Esports for them is a strategy that I think could bear fruit, but is it a moonshot? Is it going to take over their business? No, I don't think it ever will. I think it's always going to be a small portion of their business compared to their sales of their games. I think that just logically, it's more likely that the people who are enthusiastic about esports is going to be a subset of the folks who play their games. And so they're going to end up always making more money off the games themselves than off of watching the sports. In terms of merchandising, I think there's actually a lot of potential there, and I don't think they get it. I don't think they get it at all. When you look at a company like Disney, Disney gets bringing all these various things together, merchandising and experiences and parks and movies and television and games and everything, and they're willing to kind of give customers all the things that they want. I think that Activision Blizzard doesn't see the potential for these things because they see themselves as a gaming company and not really as an entertainment company. So when we were looking up above at their sort of very generic, like we want to create experiences or whatever the heck it was that they said that I don't even remember, and I said, hey, they kind of really are just a gaming company. They still feel like a gaming company to me. Nothing in here is telling me that they're really making a shift away from being just a gaming company to being this sort of experiential kind of company that really wants to do a good job of building out franchise experiences. Like, where's all the books and comics and all the toys and all the experiences that I can go to? I'm not seeing them. And I don't see a division that focuses on these things. And in fact, I think they may have fired the people in there. Oh, did they really do that? I'm going to have to check. I remember seeing something about them either downsizing or maybe even getting rid of their esports department. Recently. I don't know if that's actually true, though. I'm going to have to check. But looking at this, it doesn't seem like it's a priority. Just looking at the text they're having here, right? They're not even hardly talking about it at all. They don't seem to have a division for merchandising that's worthy of having its own breakout. They don't seem to have a division for esports that, again, that's worthy of it having its own breakout. I feel like their plans for the future are uncreative and risk averse. Creating a new franchise is risky. I will give them that. If they are really trying to create new franchises and they're going to bring me new franchises relatively soon, that's risky. Those might not go well. I'm okay with them taking a big step and trying to see, are they going to fall through the glass? To use a Squid Game reference. I don't mind them trying to create something new. In fact, it excites me as an investor. I want to see them create new franchises. I want to see them try and maybe fail to create a new franchise. I would rather see that than see them say, we're going to take our existing franchises and we're going to squeeze them as hard as we can. That's just not that exciting to me, particularly when I see trends in social trends changing. So a franchise like Call of Duty, for example, I don't know how well it's going to age for over the next 10 or 20 years. A franchise like World of Warcraft, I don't know how well it's going to age. I think that World of Warcraft probably will age better than something like Call of Duty, but I don't know. And Candy Crush, puzzle games are always fun, right? I think puzzle games, they'll last forever. I don't think mobile platforms are going anywhere. Mobile phones, the mobile form factor, I don't think it's going anywhere. So I think, interestingly, of all the franchises that they have, the one that I don't play and I'm not that most familiar with, which would be the puzzle side of it, the match 3, I guess is what they call it. I feel like that's got probably the most legs, because people love puzzles and you can play them in 5-minute bursts. You don't have to sit down in front of a console and play them. I think it has a lot of legs. I want to see new franchises, and I want to see them talking about how they're planning to support those new franchises, what form factors they're hoping for them to be on. Are they planning on making things for VR, AR? Or XR as it's sometimes called? Are they planning on making things for consoles or PC or mobile? Are they planning on having the franchises be different or additive to their existing franchises? Are they worried about whether or not they're going to be able to compete in particular areas? Are they planning on, it would be helpful if they would explain what franchises are not their key franchises and what they're going to do with them to wrap them up. I think that would make us as investors feel good, and it would make the player base for those sort of legacy things like StarCraft and StarCraft 2 feel better as well. Because there is a not insignificant group of fans who play those games and also are fans of the franchises that they're keeping alive, right? So just because I'm a StarCraft 2 player doesn't mean I don't play anything else. I might also play World of Warcraft. I might also play Diablo, right? And in fact, they try to encourage people to do so on their BattleNet service. But then if you, as a developer, go in and say, hey, we're not supporting this anymore, it's important to tell people ahead of time, to tell people in advance, and to kind of prime them and help them understand what you're doing as a company. Because people aren't going to be happy about it, obviously, when you stop supporting something that they like. You've got to explain, you've got to let people know in advance, and I think you also have to get people excited about stuff that's new that's coming that they might like. If you don't, then they're not going to have hope. They're not going to have the thing that you need to keep them engaged. People have to have hope and interest in the future. They have to be engaged in you in the same way that I want to be engaged with you as an investor, right? Your customers need to see that you're developing these new franchises. I mean, when I was talking about this with my son earlier, I said, hey, I think they have some new franchises on the way. And he said, really? I haven't heard anything. And he's way more into news on video games than I am. And I pay attention to a lot of it. Now, I actually was unaware that they had new franchises on the way. When I read it in here was the first time I even saw any sort of mention of it. So I'm wondering, what do people expect of you as Activision Blizzard? Are they expecting just for you to pull out another Call of Duty franchise every year? Is that it? Is that all they expect of you? Or are you going to get them interested in other things? And how are you going to do that? Like, is there going to be a division devoted to this new thing? Are you going to create a new division? Are you, like, all these questions that I have got no answers from this report. No answers from. In fact, in the SEC filings, you're not referring to new franchises at all. That bothers me. So it's like, well, you'll mention it in your letter to shareholders, but you're not even willing to say it to the SEC, even if it might not come to fruition. And we all get that, right? You know, you might be developing a franchise and then you're like, oh, that was a bad idea. It turned out to be a horrible idea and we're just going to put the kibosh on it. That's cool. Do it. But at least let us know that you're working on stuff. All right, cool. We're going to start at page 7 again tomorrow. So, if you've gotten all the way to the end of this video, it would be a wonderful favor to me if you would please like this video and smash that subscribe button. I would greatly appreciate it. Also, let me know in the comments below whether you might be interested in a live stream of this content, which would enable me to take questions live, and also let me know what companies you might want me to cover. I invest in quite a few companies. I think I invest in over 50, maybe over 60, maybe around 60 companies. Probably a lot of companies that you've heard of. So if there are any particular companies you'd like me to cover next, after I get through this very, very long 10K review, let me know and I will consider it. So this is my second episode. Thank you very much for watching and have a great day. Bye.